Many accountants are overclaiming for their clients' R&D tax relief claims. This is not on purpose, but just due to a lack of knowledge on the topic. Most accountants do not know when a project starts and finishes for an R&D tax claim. So when does a project start and finish? Well, stick around and find out on today's episode of the R&D Tax Show. Let's go! Welcome to the R&D Tax Show, where we help accountants, tax advisors and their clients claim R&D tax relief. It is important to know when an R&D project starts and finishes to ensure that you claim the correct amount of costs for your client. This can prevent underclaiming and overclaiming for your client's claim. I was recently introduced to one of our accounting partners' clients to help them with their compliance check into an R&D tax claim. The accountant had claimed 9 months of the project in the R&D tax claim when they should have only claimed 5 months. This is because the time taken to resolve the technological uncertainty lasted 5 months. When does R&D start and finish? HMRC guideline states that R&D starts when the work carried out to resolve the scientific or technological uncertainty begins, and R&D ends when that uncertainty is resolved or the work to resolve it ceases. Big tip 1. Remember, the end of an uncertainty can be when a project fails. Going back to my example, my client had a year end of 31st of March 2021. The technological uncertainty started in August 2020 and ended in December 2020. Only the qualifying costs from August to December should be included in the R&D tax claim. Qualifying period can actually start at any stage of the R&D project. It can be at the planning stage, where the developers carry out meetings and brainstorm ideas to resolve the technological uncertainties of the project. Alternatively, the uncertainty may unravel during development. The developers may use established methods to create a new product, but this may not work, so they now have to trial and test novel ideas. Uncertainties can also arise in the design, research and testing phases. Big tip 2. Instead of speaking with the directors and business owners, I recommend that you speak to the competent professionals involved with the development. They'll be able to provide you with better details of the uncertainties. Big tip 3. The uncertainty can be resolved when the product has gone into production or when a working prototype has been created. What if development restarts on an existing project? New issues may arise once a project has been completed. These problems may arise during production or at a stage where your client wants to further develop their product. As with the previous qualifying R&D period, there has to be a scientific or technological uncertainty. Once this is recognized, the R&D restarts. Big tip 4. Minor tweaks and routine fault fixing does not qualify for R&D tax relief. So as a conclusion, what's the one thing you can take away from today's episode? Always ask your client when the technological or scientific uncertainty started and when it finishes. If you've got any questions, get in touch. Otherwise, I'll see you next week. Goodbye. Our channel is the holy grail to gain knowledge on how you can help your clients claim R&D tax relief. We upload a video every Thursday at 10 AM. These videos can be technical, but we talk about the principles and fundamentals, so grab your notepad and pen. And some more case studies where you can get an idea of real life scenarios whilst enjoying your brew.